Hello, 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 everyone. Mike Arnold here, co-founder of Pat Trading Partners, along with Bob Itchy. I'm just trying to get myself to appear there. It just keeps going away again. Have to talk to Ecamm about that. So, how is everyone doing? Did everybody survive the gap down, the recall gap down, and the quick gap fill, and then roll over with the Nasdaq this afternoon? Hope you did. Hope you did. Hope you did. By the way, if you're new here, please do consider subscribing, ringing the bell, and hitting the like button. Let's see. Hey, Wavy. Uh, he's starting off great. Short play for me near the end of the day, but I always seem to sell too early, leaving too much on the table. What do you mean leaving on the table? Okay. How does a trader get over this? And define leaving on the table, because you're never going to completely buy bottoms and sell tops. You're looking to take a chunk out of the middle. And also, that's why you should have a strategy that involves targets and proper reward to risk, and stick with reward to risk ratios. But I have a question for you. Let's say, you buy with that buy right here, and let's say you're still in it, okay, and you haven't taken anything off, and I'd be watching the bottom of the daily rotation zone. So let's say it closes tomorrow below the daily rotation zone. You're like, I'm out. And you took, let's say it closed at 10:31, you got in at 9:38, roughly. So you ran it from 9:38 to 10:31. All right, nearly a hundred bucks. Is that leaving too much on the table because you didn't get out up here at, what was the high? At 11.19? Or did you take a chunk out of the middle? Or is the other option to take some off? Because this is why my preferred method is to always take some off at key areas and then trail the rest. So you take some off, especially even at this 1100 area we've talked about, which has been pretty decent resistance. And then you trail the rest. And if it closes below the daily rotation zone, you're out again with the rest. So you take some off at the key areas, and you still have some with this potential still bull flag to ride it higher. So tell me what your how you're looking at it. Ken, welcome, welcome, welcome. What a glorious and painful trading day. Sat on hands day for me. Well, that's good. Just know where your stops are now. Know where your longer term stops are. Still technically in bullish mode, but you can get these kind of reversals. Let me go over and switch some cameras here. You can still get these kind of end of the day reversals like this with the NASDAQ. I mean, here's your NASDAQ. I said yesterday, watch the NASDAQ. You had this massive dump in the NASDAQ. So not surprised to see this sell off in Tesla. We'll go over some stuff because we had a really nice head and shoulders pattern in here. Really nice head and shoulders pattern in here. But we'll go over some stuff. And this is why you'll see me literally do the same thing over and over again with these levels. So let me take this off for a second. So by the way, I have very specific strategies. So we have the gap down with the recall news, because pre-market for a while it was trading pretty decently, and then you had the gap down. So immediately put on the retracements. Now for the longer term play, I'm watching for the close above the 62.5%. 62.5%. Here was your close. And then you got the full gap fill. So that's the play for the full gap fill. Now we'll go to my glorious, my ever favorite for longer term people, ever favorite 1 minute chart, because we actually did have a little mini double bottom. And these are the levels. Remember this 1054, what was that exact level? What was that exact level? Because we had it on the chart yesterday. You coming down. This is where's that level? 1054.18. We had that level on the chart from yesterday's live stream. It hasn't changed a thing. I sometimes get messages and people go back and watch the videos like accusing me of changing the levels. And you can just go back and watch a prior live stream and see the levels that are already on the charts. But that's another story. So you had your double. You had your little mini double pattern in here on your 1 minute. And we all know how, and that would be like a front run pattern. Sorry for scrolling around here so much, but this would be a little mini front run pattern to ride it up to, that 62 and a half. But you see coming up here, stalling at the first level, then stalling at the second level, and then finally completing the little move up. And that sat here with, you know, that's targets right in the middle, and then you could have had a continuation play again. And I'm just showing there's, depending on how active a trader you are, there were plays like that throughout the day, but that's the little gap fill, and we've never changed the rules on the gap fill. And then running up here, I'm just, if you want the updated levels throughout the day. Sometimes when I post them in Discord, you'll have to join Discord. Otherwise, you're just going to see my end. Last level I put up was this 1094.52 and 1099. Remember, my bullish line in the sand was 1099. 1099. But here we had this really nice head and shoulders pattern. Shoulder, head, shoulder. You do the breakdown of where it gets below the neckline, and you have your targets here. And here's where it closed below the, I gotta turn my magnet off. And there were your targets, where it broke the neckline. And then it gave you a full target of 1082.66. So again, Wavy, let's say, I got a question for you. Let's say I played this head and shoulders, you get short here, and then your full target's 1082.66. And you take it all off and then it continues lower. Did you leave stuff on the table or not? Because, there could have been another short play afterwards down to the downside, but you take off the head and shoulders patterns at the target. You see it pause there nicely, and then you had a potential double bottom that never triggered. But let's say that potential bottom had triggered and then it rallied back up. You would have been great. Oh, look, my targets were great. This case didn't trigger and then rolled down lower. So did you leave stuff on the table, or did you take a trade and you managed the probabilities and you took your profits? So let's see. Like I'm short at 1080, but I got out of my short at 1075, expecting a bounce at the end of the day. You should always have a reason to close out your trade. Also, whether it be a level, don't just trade off your gut. Like that's why you could use targets. You could say, okay, I'm going to here's, let's say, all right, you're short at, let me put my magnets back on. This is where if you have a set of rules you follow. All right, so let's say you got stuff off, then you got re-short, when it's breaking down below here, this 1079, 1080 level. All right, you see it's riding down the 15-minute. Well, what would I be doing? Well, just off these retracement harmonics, because you have the run up from the low to the high, so you can target the 50% and ratchet down a stop. Then you can target the 62.5% and ratchet down a stop. And then if it's a day trade only, okay, we're pausing at the 62.5. It's right at the close. I'm taking it off. If you broke the 62.5 and there's still time left in the day, what's your next target? Your next target would be the 75, which is down here, this 1063. You break below that, you lower to stop, you come down to this 1058 level. So that way, you're ratcheting down a stop. Other things you can do, you can use the, and don't be afraid to, to trail stuff out with harmonics level. See, all right, so you're short again. You have a cluster right here. You lower a stop. You have the next target. You lower a stop. You have a next target. You lower a stop. Let's then say it rallied back up here and it closes back above this prior harmonic level and into the 5-minute rotation zone. I'm out. So what? You didn't call the low at 1069, but you got out at a decent price. So you're don't worry about calling highs or lows. That's going to destroy you as a long-term trader. Worry about taking the chunk out of the middle and have a set strategy that you utilize, because when you have a set strategy, you can then figure out how well it's working. And you can work on fine tuning it, but don't try to fine tune it to call every top and bottom. That's just a fool's game. But you can start learning to maximize your reward to risk ratio by, all right, am I better to take stuff off at some key levels and then trail out? Am I better to just use the targets and then take it off? And then if there's a re-entry, get a re-entry. If you do things consistently, you can, and you keep a trading journal and you keep a really good trading log, over time you can see how you're doing, and then you can make adjustments and see if they're better or worse. Instead of, oh, I just felt it was going to bounce at the end of the day. Was there a pattern? For example, let's just say hypothetically you were short up here, and then, all right, we have this potential double. Do you, just because you have this potential double right here, just say, oh, wait, I better take something off because I have a potential double? It never triggered. Now, if you come down here, you have a potential double, and then it triggers, hey, I'm covering my short. I'm out. Because now we have a reversal pattern. But did you take it off down here or did you take it off up here? Up here would have been the logical place if the double triggered. If not, just because you have a potential, you don't take it off. You don't pre-guess things. You don't try to predict. You trade what's coming out. Okay? You trade what the market's showing you. And even tomorrow, you can use this key area. We start dropping below the 62.5. I'm continuing to watch for lower prices. Well, let's go through our analysis, and we still have this this flag pattern. We're still in above the daily. Let me clear some of this up. It's just getting way too cluttered. Oops, getting way too cluttered, so we can't even see the bars. I'm gonna bump this down. But look, so guess what I'm focusing on? If we have weakness tomorrow, we have the harmonic 10, 46, 79 with the daily rotation zone. You don't get a bounce there. I'm then really watching for about this 1031 pullback. You get a close below there. That's in neutral mode. Also keep in mind we'll get the delivery numbers probably on Sunday. Could be Monday, but probably on Sunday. They've been released on the 2nd, and that's the wild card in all this. So you have to learn how you're managing that with your. That's why it's always good, Still, if you did get something and you were still in it from down here, and you get the close definitely below the daily rotation zone, I would definitely be taking something off. And if you want to leave something on in case you get a pop with the delivery numbers, that's where you have a pop. Where would my final line in the sand be? It has to still be at the 62.5. You get a close below the 62.5, then I'm watching for the gap fill and a retest of the lows. And again, I'm not trying to call tops or bottoms. I'm trying to play the probabilities. The probabilities, even with this pattern, is still for longer term, more upside price action. Why is that? We've talked about this before. We still came up out of the weekly rotation zone. We still have the daily rotation zone in our favor. If we go back to neutral mode on the daily, that's why you lighten up, and because you can get that bigger pullback back to the weekly, and we still have that massive double top to trigger. But with this little bull flag holding both the 4-hour rotation zone, slight close in it, and look where the bottom is, this 1040.44. So again, you break down there. Besides this 1046.79, 1044.44, you close below there on a 4-hour basis. You might even lighten up then before even the daily close. Tomorrow's going to be thinner trading, though, with New Year's Eve. Let's go back. Yeah, you're not going to capture the entire move unless you have some magical system that can call tops or bottoms. I bought at 887. Would I be? I think I sort of answered that, Ken. You got to know where your stop is for this, and that's why I wouldn't have been afraid of lightening up here now, or at worst case, keeping you start getting that close below this 37.5 below the daily rotation zone. I'd definitely lighten up. I'd probably still hold something though. I can't give trading advice, but I'd hold something possibly into the delivery numbers, especially if you're long from down here. Uh, yeah, you have to stick to the plan. yeah, you set your risk reward and also learn to use patterns and key levels to set it. And you don't always have to. Too many people are all in and all out. I find it makes much better traders to get in on an entry and then scale out of positions. Take some off at key levels and then trail with a stop, because that's going to take the pressure off on trying to, did I get out too early? Did I get out too late? What did I do? You get out at a key level and then you trail out the rest. So that means you always enter in lots, like even if you're playing options, let's say you're playing it in the options, you enter at a minimum of two. So that way you can take one off and trail out with one. If you're trading shares, your minimum would be two shares then. So you can take one share off and trail out with the other one. You're going to become, the more traders I've worked with that have learned to do that have become more successful. And there's even ways to do it where I talk about, let's say you go in with 5 shares because it's Tesla. Maybe maybe that's what your account can stand. You take 2 shares off at a key level. You take another one off at another key level. Oh, we got a little pullback and we're back in the rotation zone, rotating back up. I put a share back on. We rotate up again. I take a share back off at another key level. But I'm still holding those maybe 2 shares. We get to we're having a topping pattern now, and we're getting divergences. I'm now dropping down to 1 share. I'm against major resistance. Oh, we just triggered a double top. I'm out of that last share. I'm looking for the pullback to re-enter a trade. When you review your trades after you're done, what do you look for? Or do you even look at them like I do, where I'm looking to see if I was right or wrong to get out when I did? Over time, this is where, not on a trade by trade basis, it's handier to review on a weekly basis and a monthly basis, and then gauge, are your levels correct and your entry strategies correct and the way you're exiting. Because you can go back, and this is where you can test, all right, do I get out at a level? Am I getting all out? Am I trailing out? Am I getting out a partial at a level? And you can go back with your trades and, after they're done, revisit them and say, okay, now would I be better to trail out and go back and reanalyze your trades, like using trailing strategies, because you can go back and recreate the levels and the harmonics and everything else. Would I have been better off taking some off at like the 25% harmonic than trailing the rest out beyond this thing? Would I be better at getting out everything and then just looking for a re-entry? Would I be better to not take anything off at the 25% harmonic and then just raising my stop continually? You can go back and analyze trades, and you want to do them in large chunks. You don't want to say, based off of 2 trades, this would have worked better. That's a silly game to play. You want to have a bunch of trades. You're better to not even go back and analyze them until you at least have 100 in the bag, and then you can go back and go through each of those trades with those 3 different methods: getting all in and all out, getting all in partial out and trailing, getting all in and just trailing out. And you can see what works best for you with the levels you use. What about gap fill at 940? This gap fill. The only way I'm targeting that, look, that's below the 62.5. You start getting close below 62.5, then I'm targeting the gap fill. Until that happens, that's a distant memory, because we'd have to get through the daily rotation zone first. Then we'd have to break that 50% key support level. And where do I watch for bigger pullbacks? Even between the 50 and the 62.5. We start challenging the 62.5 and closing below it. Then I'm targeting the gap fill. Until then, I can't say I have the daily rotation zone. Now we start dropping back to neutral on the daily, it becomes more likely. Until that happens, I got to play the probabilities. Again, I don't predict. You play the probabilities. All right, my plan is to hold till 21 EMA 1032 and take half off there if it breaks. There you go. You have a plan then, Ken. Okay? So, which is a good, why? Because let's go through this. Let's take a look at this in terms of what Ken just said. You get below the daily rotation zone, fine. That didn't hold. I'm out a part of it, and then below the 62.5. Because once we get below the 62.5, we're more likely to go down and retest key lows, and we have the gap fill. So I like that plan. There you go. And if even if you close below this daily rotation zone tomorrow, you have part in for the delivery number. So if it pops back up, you're still long. And you can always, if it starts rallying, you can always re-add part of your position back on. Don't be afraid of getting out of stuff, and then if you get a new entry signal, getting back into a partial position. Because you're never going to know exactly what's going to happen. You get it in your mind, and this is to everybody. Get it in your mind. You want to learn to play the probabilities. Are the probabilities 100%? No, and they'll never be. But you put the probabilities in your favor, and then you manage the trades accordingly. Okay? If you start to learn to think that way, you'll become a much better trader and investor. You're welcome. So, and then stick with your plan. You know, don't go adjusting it on a trade by trade basis. Like for example, Ken. Now, if he goes, oh well, let's play hypotheticals. Uh, let's say Ken it closed tomorrow and he got out of part of his position. Okay, then they have great delivery numbers and it pops back up. Ken shouldn't be going, well, I'm never doing that again because, all right, once it closed below the daily rotation zone, it's more favors more neutral price action. So fine, you took something off the table. Don't go then, oh, next time I'm not going to do that. Because the next time when you don't do that and then it continues lower, then what? The next time you're, oh, well, now I'm back to doing this. Then you're flip flopping back and forth with every other trade and you're not developing any consistency. You got to stick with a plan and do it for a bunch of trades, and then you can go back and analyze how it starts working and analyze your probabilities and analyze your true risk reward and analyze what your winning percentage is. All right, based off my winning percentage and uh, based off my reward to risk ratio, here's what I'm most likely to do longer term utilizing these key strategies. And then if you want to make a change, you'd make that change for a bunch of trades and then judge your reward to risk ratio again and your winning probabilities. And then you can come up with a projection of what you're most likely to make. And is that better? Was it better this way or the way it was before? It's like the eye doctor. Better one or two, better A or B, you know, we're going back and forth. You want to, oh, well, that it was better the way I was doing it. I'm going to go shift back to that way because that way it works better. All right. So, you know, this is how we do things. We could see a sell-off. Again, we could see anything. You could see a gap up. You could see a gap down. Where did the probabilities still favor with this kind of little price action? They still figure potentially higher prices. And when I say potentially higher, I'm not talking 1400. I'm talking back up in here. And then if you break this key 1020, then it favors even higher prices. But you could come up, we could gap up, we could get delivery numbers. It could then form a nice double top and then trigger that and you could get downside. Don't predict. There's a difference between predicting and trading. And that's what I want everybody to get through their head. Predicting, you can be right, you can be wrong, you can say, see, this happened, but is it reproducible? If it's not reproducible, and you're just taking a stab, well, this is this, is this is this, is this is this. If he can't make you money, is not reproducible, it's not an actionable trading plan. Okay. RSI, which time frame RSI is overbought and needs to cool down? Look, the RSI back here was overbought. Was it overbought here? Yep. Was it overbought here? Yep. When did it cool down? It didn't cool down till here. So things can stay overbought or oversold a lot longer than you like. But just because something's overbought doesn't mean anything. Is there a pattern there that's a sale? Is there something that tells you to take an action? If there isn't something that tells you to take an action, then you don't take an action. If there is something to take an action, then you take an action. And that can be different. You can have different entry signals than I do. You can have different exit signals than I do. It doesn't matter, but make sure they're consistent. Please, if I can give you anything for the new year that you should put into place, rewatch this live stream and take notes and make sure, all right, can I apply some of these lessons and make them benefit me in the new year and help me become a better trader? If you can do that, then that is fantastic. You're welcome, Wavy. I'm just trying to help everybody who watches this, whether you're in the live stream or watching it on demand, because there are some great things. And if you can't track it, you can't trade it. And if you can't learn from what you're doing, you're never going to get better. And you're not going to do that by flip-flopping around and changing what you're doing every other day. A great lesson I learned early on: the market can remain irrational longer than you can remain solvent. Yes. And it can remain overbought or oversold a hell of a lot longer than you thought. So you're going to have to do things based off of patterns and also learn, yeah, here's your next thing. Stops are now my best friend. That's right. Because they're going to prevent you from compounding losses beyond what you should be taking. And they're going to help you stay in trends longer. And yeah, last trading day of the year, let's all end it on a good note. And if it's a good note tomorrow to just sit on your hands and do nothing, then sit on your hands and do nothing. Thank you, Sterling. Yes, please do leave comments and hit the like buttons. Try to get this out to more people, because a lot more people could do a lot better with content like this rather than playing hoopla, playing, you know what, if it goes lower, just add more, just add more, just add more. Tesla's going to the moon. That's, you know, it could be going to the moon, but learn to trade, not to just guess. And you're better at trading strategies than, oh, I think it's going higher or I think it's going lower. That's not a trading strategy. That is, and your gut more often in trading is not your friend unless you've been doing it for like many, many years and you just have a like a sixth sense. But still, I've been doing it. I started in 92. So this will be my 30th year. And where do you see me? I mean, I might say based off the price action, it's looking like higher or lower. But when do you see me just say, "Oh, I'm just buying because it looks like it's going higher"? Or do I have a specific entry? And I'm shared entries with everyone. Or do I have a specific exit? You know, do I have a specific? Do you see me flipping from, oh, today we're using the 62.5% retracement. Tomorrow we're using the 75. Oh, now today I'm using the 87.5. No, my major key areas I keep reinforcing, and you should be seeing it in multiple strategies I use. All right. You're welcome, Lauren. Lauren, I hope I said your name right. I hope I didn't butcher it if it's a different pronunciation. All right, guys. Tomorrow, Tesla live stream an hour earlier, 3:30 Central, because there's no market overview. That's going on at Sunday at 3 p.m. on Sunday Central Time. So if you want to prepare with me for 2022 of trading, join me Sunday afternoon. If you want to do the final wrap up tomorrow before delivery numbers potentially, then join me tomorrow afternoon. If not, if I don't see you, or again, Sterling, join Discord, very good advice. If I don't see you, everyone have a happy and safe new year, and we'll continue to grow this channel and to grow as traders in the coming year of 2022. Yeah, and please do share it far and wide. I think there's enough beneficial information at a very reasonable price to help people. Very reasonable price. So, yeah, hidden gems. So I will talk to everyone later. Have a fantastic rest of your evening. Bye for now.